Silver breakout alert. Something is happening right now that we've never seen before in precious metals history. We're witnessing the kind of price action that only comes around once in a generation, and if you're not paying attention, you could miss the biggest wealth transfer opportunity of the decade. I'm going to break down exactly what's happening with silver, why the markets are going absolutely crazy right now, and what this means for anyone holding or thinking about buying precious metals. Let's dive in. Right now, silver is trading at $79.11 per ounce. But here's what's truly remarkable. Silver is up $4.40 today alone. That's a 5.89% gain in just 24 hours. This is the largest single-day gain I have personally witnessed in my years of following silver markets. To put this in perspective, a nearly 6% move in a single day for any major asset is extraordinary. Silver is known for being more volatile than gold, but even by silver's standards, this kind of explosive movement is exceptional. When you see price action like this, it usually signals that something fundamental is shifting beneath the surface, but silver isn't moving alone. Gold is also climbing today, up $51.34, which represents about a 1.15% gain. Now, that might sound modest compared to silver's explosive move, but here's what's critical. Gold just hit a new all-time high of $4,532.18 per ounce. That's absolutely significant because when gold breaks into new territory, it validates the entire precious metals bull market thesis. Gold is considered the more stable, conservative precious metal, so when it's hitting all-time highs, it tells us that major institutional money and large investors are taking serious notice. The fact that both metals are moving higher simultaneously, with silver dramatically outperforming on a percentage basis, is exactly what you want to see in a healthy precious metals bull market. This is textbook bull market behavior. Now, here's something that might surprise many of you. Platinum has also set a new all-time high. The previous record for platinum was approximately $2,270 per ounce, set back in 2008. Today, platinum is trading at $2,507.70 per ounce. That's up $246.60, representing a 10.91% gain. This matters because platinum often gets overlooked in precious metals discussions. Most people focus exclusively on gold and silver. But when platinum breaks to new highs alongside gold and silver, it tells us there's genuine demand across the entire precious metals complex. This isn't just speculation. This is fundamental buying pressure. If you're finding this information valuable and want to stay updated on precious metals markets, make sure you're subscribed to the channel and hit that notification bell so you don't miss future updates. Now let me talk about something that's completely changing my personal investment strategy. The gold-silver ratio has now fallen below 60. Let me repeat that because it's crucial. The ratio is now below 60. For those unfamiliar, the gold-silver ratio is simply the number of ounces of silver needed to buy 1 ounce of gold. When the ratio is high, say 80 or 90, silver is relatively cheap compared to gold. When the ratio is low, say 40 or 50, silver is relatively expensive compared to gold. Historically, this ratio has averaged around 60 to 70 over the long term. During the March 2020 crisis, the ratio spiked above 120. That was an extreme anomaly and represented incredible value for silver buyers. Now that we're below 60, this is transforming how I approach precious metals purchases. Previously, I focused almost exclusively on buying silver because the ratio favored it. Then I shifted to buying both metals equally. But now, I'm actually considering prioritizing gold over silver. I know that sounds counterintuitive given silver's performance, but the strategy with the gold-silver ratio is to buy whichever metal is relatively cheaper. I'm even contemplating trading some silver holdings for gold. However, I want to see the ratio continue declining, perhaps into the low 50s or even the 40s before making any major moves. Here's something that illustrates just how significant silver's rally has been. Silver has climbed up the rankings on the list of top assets by market capitalization. About a month ago, we watched silver pass Microsoft. Then it passed Google. Now, silver has even surpassed Apple, sitting at the number 3 spot globally. Compare silver's market cap of $4.2 trillion to Bitcoin's current market cap of $1.7 trillion. Earlier this year, Bitcoin's valuation was actually higher than silver's. Now, it's not even close. Silver has decisively taken the lead, and the gap continues widening. This matters because it shows where capital is flowing. When institutional investors, sovereign wealth funds, and everyday investors allocate money, they're increasingly choosing silver. That creates a reinforcing cycle. Higher prices attract more attention, which brings in more buyers, which pushes prices even higher. Let's examine silver's annual performance because these numbers are truly extraordinary. Silver is now up 169.63% year to date. Think about that. 169% in a single calendar year. This kind of performance is exceptionally rare for any asset class. but the pace is actually accelerating. This month alone, silver has surged 48.09%. A 48% gain in 30 days would be considered outstanding as an annual return for most investments. Silver has delivered that in just 1 month. What could slow down silver at this point? Honestly, it's difficult to identify immediate obstacles. Industrial demand continues growing. Investment demand is surging. Supply remains constrained. We're not seeing signals that suggest this rally is exhausted. Now let's talk about inflation-adjusted silver prices, because this gives perspective on where silver could go. Using current government inflation metrics, the 2011 high translates to about $70 per ounce in today's money. We've officially surpassed that level. But here's the bigger benchmark. The 1980 inflation-adjusted price equals approximately $145 per ounce using current calculations. If you use the pre-1980 methodology for measuring inflation, that 1980 high translates to roughly $744 per ounce in today's dollars. I'm not predicting $700 silver, but it's important to understand that depending on how you measure inflation, silver could have tremendous upside remaining. Even focusing on the more conservative $145 target, silver would need to roughly double from current levels. Given the momentum, the fundamental supply and demand dynamics, and the unprecedented monetary expansion we've witnessed, I genuinely think we could challenge that 145 level next year. Before we continue, I want to remind everyone that this is educational content only and not financial advice. I'm sharing market analysis and my personal perspectives. You should always do your own research and consult with qualified financial professionals before making any investment decisions. Past performance does not guarantee future results. One of the best ways to gauge where we are in a bull market is examining public interest. Google Trends data provides fascinating insights. When we search for the term silver, interest is now at a perfect score of 100, representing the highest search volume in over 21 years. We see the same pattern with silver price. Search interest has peaked at 100, the highest ever recorded. But perhaps most telling is searches for how to buy silver. This represents people actively trying to figure out how to become buyers. Looking historically, we see spikes in 2011 when silver hit $50, and during the COVID crisis in 2020 when silver rocketed from $12 to $28. But current search volume has exceeded both those previous peaks. This is the most this term has ever been searched on Google. What does this mean? It suggests we're in a breakout phase where silver transitions from a niche investment to a mainstream asset that everyday investors are beginning to seriously consider. That transition phase can last longer and go higher than most people expect. Now we need to discuss what's happening with silver pricing in different markets, because this is absolutely crucial. It's not uncommon for silver to trade at slightly different prices in various regions due to local supply and demand, currency factors, and market structures. What is extremely uncommon is for premiums to become this large practically overnight. Earlier this week, price differences between major markets were minimal, around 3%, but something has shifted dramatically. We're now seeing significant premiums in certain markets, suggesting physical silver is in high demand in major consuming nations. When prices diverge substantially between markets, it usually indicates physical metal is becoming harder to source in certain regions. That's a very bullish signal for future price action. One prominent analyst recently noted that with the current momentum, their $100 price target for silver this year doesn't seem outlandish anymore. They even suggested we could potentially see $200 silver within weeks. Can you imagine silver reaching $200 per ounce in just a month? It seems extreme, but consider today's massive move and the unusual price dynamics we're witnessing. A parabolic move upward, while unlikely, is within the realm of possibility given current conditions. Several analysts are now discussing the path to triple-digit silver. One observer noted that silver's 48% monthly gain puts us on pace for three-digit prices by mid-January if momentum continues. Here's another metric. Silver is now only 10 times away from its inflation-adjusted all-time high using alternative inflation calculations. That suggests significant upside potential remains. One major bank, among the largest in the world, expects a 300 million ounce silver deficit next year. Industrial demand will continue rising. Investment demand is about to increase significantly. This is extremely bullish for silver. Looking at silver exchange traded fund market share compared to all ETF assets, we're currently at about 0.3%. Back in 2011, when silver hit $50, that figure was nearly 2%. We're just starting to climb now. This tells us people are becoming more interested in silver investments. If people are just now figuring out how to buy silver, the majority of potential buyers haven't actually purchased yet. The capital that will flow into silver could fuel continued upside. If you're interested in learning more about precious metals investing and strategies for navigating this market, check out the description below for additional resources. And consider joining our community for regular updates. I've never seen moves like this in silver before. It is astounding to watch silver continue climbing week after week, day after day. At the start of this year, silver was trading at less than $30 per ounce. We're now at $79.11. Platinum's performance has been equally impressive, up 172.78% year to date. Gold, while more conservative in its movements, is still up 72.95% this year. These are generational moves in precious metals, the kind of price action that creates significant wealth for those positioned correctly. But it's not just about the money. Precious metals represent something deeper. They represent sound money, tangible wealth that can't be printed or digitized away. The fundamental drivers supporting precious metals remain firmly in place. Central banks continue accumulating gold and silver. Industrial demand, particularly for silver and solar panels, electric vehicles, and electronics, continues expanding. Supply remains constrained as mining production struggles to keep pace. Meanwhile, geopolitical tensions continue escalating. Currency debasement concerns are growing globally. Investors are seeking safe haven assets that hold value regardless of government policies or economic turmoil. Looking at the broader economic picture, we're witnessing unprecedented monetary conditions. Interest rates, while rising from historic lows, remain accommodative by historical standards. Government debt levels have exploded globally. Deficits continue expanding with no end in sight. These conditions typically favor hard assets like precious metals. Gold and silver have served as stores of value for thousands of years. They've outlasted every fiat currency in human history. That track record matters. Some people ask whether it's too late to buy silver at these prices. My perspective is that we're still in the early to middle stages of this bull market. Yes, silver has already moved significantly, but if we're truly heading toward triple-digit silver, current prices will look cheap in retrospect. The key is having a long-term perspective. Precious metals aren't get-rich-quick schemes. They're wealth preservation and appreciation vehicles that work over years and decades, not days and weeks. Sure, we're seeing explosive short-term gains right now, but the real power of precious metals is their ability to maintain purchasing power over generations. Dollar-cost averaging remains an excellent strategy. Rather than trying to time the perfect entry point, consistent purchases over time smooth out volatility and ensure you're building your position regardless of short-term price fluctuations. Physical possession matters too. While ETFs and mining stocks have their place, nothing beats holding actual metal. When you own physical silver and gold, you have an asset that exists outside the financial system. No counterparty risk, no reliance on institutions. Just you and your wealth. Storage and security become important considerations as your stack grows. Whether you choose home storage, safety deposit boxes, or professional vault services, having a solid plan for protecting your metals is essential. It's also worth considering the historical context of where we are. Previous precious metals. Bull markets have lasted years and seen prices multiply many times over. The 1970s bull market saw gold go from $35 to over $800. Silver went from around $2 to $50. Those moves took nearly a decade to fully play out. We're potentially just a year or two into the current bull market. If history rhymes, we could have years of gains ahead. Of course, the path won't be straight up. We'll see corrections and consolidations. There will be scary pullbacks that test your conviction. That's normal and healthy. Bull markets climb a wall of worry. The strongest hands are those who can weather short-term volatility while keeping eyes on the long-term prize. Education is crucial. The more you understand about monetary history, economic cycles, and precious metals markets, the better equipped you'll be to make informed decisions. Read books by respected precious metals analysts, study past bull and bear markets, understand the fundamentals driving prices. Community matters too. Surrounding yourself with like-minded individuals who understand the precious metals thesis helps maintain perspective during volatile times. Forums, social media groups, and local coin clubs can provide support and knowledge sharing. Remember that precious metals are just one part of a diversified wealth strategy. While I'm bullish on silver and gold, having all your wealth in any single asset class carries risk. Balance is key. Precious metals, real estate, productive assets, and liquid savings all play roles in comprehensive wealth management. Tax considerations are important too. Different jurisdictions treat precious metals transactions differently. Some have sales taxes on purchases, some have capital gains taxes on profits. Understanding the tax implications in your area helps maximize returns. Authentication and quality matter when buying physical metals. Stick with reputable dealers. Buy recognized products from government mints or well-known private mints. If a deal seems too good to be true, it probably is. Premiums over spot price vary depending on product, market conditions, and dealer. Generally, larger bars carry lower premiums than coins. Government-issued coins carry higher premiums than generic rounds. Supply and demand dynamics affect premiums constantly. The current market environment features elevated premiums in many products due to strong demand and supply chain constraints. While it's tempting to wait for lower premiums, sometimes the best strategy is buying when you can, rather than waiting for perfect conditions that may never materialize. Looking ahead, several factors could accelerate precious metals prices even further. Continued geopolitical instability tops the list. Any escalation in current conflicts or emergence of new ones typically benefits safe haven assets. Central bank policies remain crucial. If major central banks resume aggressive monetary expansion, that would likely propel precious metals significantly higher. Conversely, sustained tight monetary policy could create headwinds, though current trajectory suggests easing ahead. Currency debasement concerns aren't going away. As governments continue spending beyond their means and central banks accommodate that spending, the purchasing power of fiat currencies continues eroding. Precious metals serve as insurance against that erosion. Industrial demand for silver particularly deserves attention. The green energy transition requires massive amounts of silver. Solar panels, electric vehicles, and electrical infrastructure all depend heavily on silver. As these sectors expand, they consume increasing quantities of silver that won't return to the market. This creates a fundamental supply deficit that investment demand compounds. When industrial users compete with investors for limited supply, prices naturally rise. We're seeing that dynamic play out in real time. Mining supply struggles to respond to higher prices because bringing new mines online takes years and requires massive capital investment. Existing mines face declining ore grades and rising operational costs. Supply-side constraints will likely persist even as prices rise. Recycling provides some supply but can't fill the gap. While higher prices incentivize recycling, much silver consumed in industrial applications is uneconomical to recycle or lost permanently. Electronics, for example, contain tiny amounts of silver in each device, making recovery impractical. The setup for precious metals, particularly silver, looks incredibly bullish from multiple angles. Strong fundamentals, improving technicals, and growing mainstream awareness create a potent combination. Are you excited? I'm genuinely thrilled to be witnessing this historic moment in precious metals markets. I've been following and accumulating silver since it was $12, $14, $15 per ounce. Seeing it at $79 validates years of patience and conviction. But I don't think this is the end. I believe we're just getting started. Silver and gold are poised to continue surprising everyone with how high they can go. The fundamentals support much higher prices. The technical picture remains strong. Public awareness is just beginning to build. Stay tuned for more coverage of precious metals markets. Make sure you're subscribed so you don't miss important updates as this historic bull market continues unfolding. Thank you so much for watching. I sincerely appreciate your time and attention. I'll see you in the next one.